Hello and welcome. You're watching The Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal, and today the focus is going to be on your life financial planning. So just in case you have any question related to your financial goal, your mutual fund strategy or your investment strategy, you can send across your questions on our WhatsApp number, which is 8657974571. We also have an email ID where you can send across your queries, themoneyshow@etnow.tv, and we will get all of your queries answered live on the show. Okay, so let's move on, and today to answer all of your questions and to do your life financial planning, I have with me Pankaj Matpal, who is MD of Optima Money Managers. Pankaj, hi, good evening and welcome to the show. And let's begin. We will take Parminder's question first. This is via email, and he's writing this from Sangrur, Punjab. He says that he's doing an SIP in Quant Small Cap, 1,000 rupees per month, ICICI Proof Pharma, Healthcare, again 1,000 rupees per month, Mirror Asset, Large and Mid Cap, 1,500. The aim over here is to achieve 5 CR in 15 years, and he needs this money for his daughter's marriage. And he wishes to know if he can hold on to this fund mix, or are there any changes needed. There's specifically need to step up, but he's not written it if he'll be able to do it or not, but it's suggested that he should. I'm sure you'll be coming to that also. All right, so let's begin with fund mix. I really don't know about his understanding of share market or maybe how the mutual fund works, but then he's got a small cap, he's got a health, pharma, healthcare, and a large and mid cap. So I think a co-portfolio, I think that should be in place first for Parminder. What do you suggest?
Kavita, good evening. Yes, I agree with you. See, if you see the long-term portfolio, ideally, if he has diversified funds in his portfolio, that will be better. So he has two diversified funds. One is Mirror Asset Large and Mid Cap Fund. Another one, he has Quant Small Cap Fund. But this ICICI Prudential Pharma Healthcare and Diagnostic Fund, though fund is very good, but as it seems that he's a new investor, my suggestion would be that he can move from this fund to another large and mid cap fund in the same category. ICICI Prudential Large and Mid Cap Fund means same AMC. ICICI Prudential Large and Mid Cap Fund can be a good choice, or he can invest in ICICI Prudential Value Discovery Fund. So diversified fund will be a better choice if he has 15 years investment horizon. Second thing, as far as target is concerned, I think there's a big mismatch. He has been investing only 3,500 right now through SIP route, and his target is quite big. He wants to achieve something 5 crore rupees he has mentioned. So with 3,500 per month, if I assume 12% CAGR, in 15 years, he can expect around 17 lakh rupees only. So he'll have to increase his investment definitely drastically. He'll have to increase it. So as much as possible, Parminder, you increase your investment now, and also from time to time, keep increasing your investment amount. And also the targets will be realistic. That is my suggestion to you.
Yeah, I think Pankaj, that's a very important thing to plan, for investors, because realistic expectations are necessary, especially considering equity as an asset class. And as far as Parminder is concerned, you definitely need to step up your SIP. And although you have a ballpark figure which is 5 CR, with the same amount you'll be able to accumulate only 17 lakhs in the next 15 years, as per Pankaj calculations. So do need to do a step up your SIP, and a little changes which are recommended by Pankaj in your fund mix also. But then, okay, let's move on and let's take Yash Gaurav's question. And all right, he's doing an SIP of 35,000, Pankaj, and it's been 3 years since he started his SIP. Target is 2 CR in 15 years. I'll say the fund mix also has got Parag Parikh Flexi Cap 10,000 per month, UTI Nifty 50 Index again 4,000, HDFC BSC Sensex Index again 1,000 rupees. He also has Access Small Cap 10,000, PGM India Mid Cap Opportunities 5,000, ICICI Pru Nifty Next 50 Index 2,500, UTI Nifty 200 Momentum. Again, index fund, he's got 2,500. So he wants to review his portfolio. Okay, before we get into the fund mix, Pankaj, I really want to understand the recent performance of momentum funds. How are they doing? Because, see, when there is a typical market run, okay, fund houses come up with a lot of innovation and a lot of new type of products. Momentum has been a category which is really taken very well by the investors during a particular market phase. Okay, now since we have seen different times in the market and so much of volatility going on, uncertainty around, how has been the performance of momentum funds? Could you just talk about that for a bit?
Exactly. See, Kavita, momentum is a factor. So there are different factors like value, momentum, quality, low volatility. So these are factors. So these factors work in different scenario. So when there is a rally in the market, definitely this momentum strategy will work better. So we saw that when the market there was a rally in the market, many new funds were offered in this category, and investors have invested, and we saw a good rally that time in momentum strategy. That was quite expected, because when there's a momentum means when investors are investing more and more in same stocks, so momentum strategy works in that way. But right now, because we are going from the different phase, and this momentum strategy will not work in favor of investors. So my suggestion uh, to answer this question as well, that if Yash can uh, stop his SIP in this momentum fund and increase in the large cap index fund, like he has a Sensex fund in his portfolio where he's investing only 1,000 per month. So if he stops SIP in this momentum fund at this moment and add that amount to his Sensex fund, that will be better. Second thing, because we are talking about the fund mix only right now. So let me give one more suggestion. Like Yash has PGIM India Mid Cap Opportunities Fund in his portfolio. So that can be replaced with Motilal Oswal Mid Cap or SDFC Mid Cap Opportunities Fund. So mid cap to mid cap, but this PGIM India Mid Cap Opportunities Fund has not been performing well for quite some time. So it's a time now to move from this fund to better performing fund. So two changes, one from mid cap to another mid cap because of poor performance of the existing fund. And second, because this momentum strategy may not work well in this market condition. So that is why I'm suggesting to move to the diversified large cap index fund. Second thing, Kavita, as far target is concerned, see, considering 12% CAGR, he can expect around 1 crore 67 lakh in 15 years with his 35,000 rupees per month SIP. So if you want to achieve 2 crore rupees, if he just step up by 5%, then also it is possible that he can achieve his target. But my suggestion would be that if possible, he should increase by 10% every year, because after 15 years, the value of 2 crore will not be 2 crore. It will be half of that or lesser than that. So that is why minimum 5% he has to achieve the 2 crore rupees. If possible, please increase by a higher number.
All right. In a nutshell, Pankaj, is also important for viewers to understand that you cannot be making a financial portfolio based on market trends and based on new launches which mutual fund houses come up with. So it's very important to think of long term. It's very important to think of your risk before you latch on to the returns, that you might want. So anyways, which is why, our experts are there out for your help. Let's move on. And Pankaj, let's take Vignesh's question. He's writing this from Bangalore. He has a portfolio of 2 lakhs, currently investing in UTI Nifty 50, DSP Nifty Next 50. He also has Edelweiss Flexi Cap, Motilal Oswal Mid Cap, Tata Small Cap, Motilal Oswal S&P US Equity, PGIM Global Opportunity, Edelweiss Greater China. The foreign funds were added only 2 months ago, and he'll be able to do a step up of 3,000 per year for 17 years. And he is planning to continue in Indian equity for next 17 years. So he wants to understand, the correction in the foreign funds will continue or not. In fact, a very important topic even for discussion. So looking at the volatility and looking at, China being preferred as one of the emerging markets, India was a flavor with a premium over it. And looking at the uncertainty, China, because of the valuation, also is preferred and all. But having said that, US market, that's typically an area where investors want to diversify when it comes to international diversification, when it comes to playing safe internationally also. Do you think it's the time for them to book some profits, if at all it is there in their international funds? Maybe just book some profit and allocate that money in Indian equities which have limited exposure internationally. Can they do it specifically for when you talk about US market or your investment in the US markets?
Kavita, US is the number one economy in the world, and for the purpose of diversification, you must have some diversification. Now it depends that how much allocation you have. If you have very large allocation, then definitely considering the valuation, you can book some profit. But otherwise, if the allocation is something 10-15%, then my suggestion would be that you stay invested. That is for the US market. But
So
Kavita, if we
Pankaj,
talk about this portfolio,
right.
see,
So Pankaj, over here, if we look at Vignesh's portfolio, he's got Motilal Oswal S&P, okay, US equity. He's got PGIM Global Opportunities and Edelweiss Greater China. So if we don't look at the China fund for a bit, he's got international exposure and US-based exposure in the earlier two funds, 2,000 each. So what kind of allocation is this, and is this okay? Is this much of exposure fine to the international markets, and he can still stay put over there?
see, Kavita, I was coming to this only. See, if you talk about S&P 500, it's a well-diversified fund. So he can stay invested in this. Greater China fund at this moment looks good, but we know the China-oriented funds means there is higher volatility is expected, and we do not see a consistent performance in these funds. So my suggestion would be that right now he can stay invested in Greater China fund, but he should know when to exit from that. So at this moment, at least for next 6 months, he can stay invested. Then let's see how the fund performs, and then he can take decision. But third fund, PGIM India Global Opportunities Fund. See, it's a feeder fund that invests in PGIM India Jensen Global Equity Opportunities Fund, USD accumulation. That is the underlying fund. And if you see the portfolio of underlying fund, that has major allocation in technology and communication. So that is like a thematic fund. Like in India, when we invest in thematic funds, similarly, this fund is not a diversified fund. It is more of thematic fund. So my suggestion that he can reduce his exposure by exiting this fund. So he can stay invested in S&P 500 as well as Edelweiss Greater China, but he can exit this PGIM India Global Opportunities Fund. So one thing, that fund is a little thematic fund. It has a narrow mandate. Second thing, because exposure is also high in his portfolio, if we take the total of these three international
Right.
funds, so by
Right.
exiting one fund, the exposure will come down, and the fund otherwise also means somehow I'm not liking much that fund in his portfolio. So that
Okay,
is my
that can
suggestion.
be a
That
slightly risky bet for him. But then, having said
Correct.
that, has the international investment capping for the mutual funds increased? Has that been, again, the status has changed for it, or it's still intact?
No, it's intact. Nothing has changed, and except only Edelweiss, I think no other fund houses are accepting at this moment new subscription to their international funds. But Edelweiss has been accepting right now.
Okay, so what he can do is just stop his if it's an SIP that he's doing, he can stop his SIP in PGM Global Opportunity and then just leave the money over there and not redeem it. Is that right?
No, he can redeem even if he wants, because in India, I'm seeing that in long term, there will be more opportunities.
Okay.
So from international fund, he can exit and he can invest in Indian market.
Sure. All right. Rest of the funds are okay according to you? Any changes over there?
Yeah. All other funds are good. Domestic funds are good. No change is required in that.
Okay.
And
Okay.
if we see the target also, he's saying that he'll invest 3,000 rupees, he'll increase his investment by 3,000 every year. So my suggestion that instead of 3,000 rupees every year, he should increase in the percentage term, because 3,000 has a different value right now than in 10 years later. So by percentage, 5%, 10%, he should make that strategy. That will work better for him. And if I calculate at 12% CAGR with 21,000 per month in domestic fund, he can expect 1 crore 31 lakh in 17 years, plus the international fund, because he said he'll stop later. So I don't know when he's going to stop that. So right now what you have started and what I've suggested you, just follow that. And from time to time, keep increasing your investment amount. That is important.
All right, so that's the advice for our viewer. Let's take a quick break. And before I slip into that break, I'm going to leave you with our WhatsApp number and email ID. It's very important for you, if at all you want to get your life financial planning done by our experts. You should give us your complete details, and you can do that via WhatsApp number, which is 865-797-4571. The email ID is themoneyshow@etnow.tv. All you have to do is just send across your mutual fund portfolio, for how long you want to be in that investment, and what is the corpus that you want to accumulate. Just basic details for our experts to do your life financial planning. Welcome back. You're watching The Money Show, and it's a day where we are answering your portfolio queries, and I'm joined by Pankaj Matpal, who is doing your life financial planning. Before I go ahead, let me once again flash our WhatsApp number and email ID, because for all the viewers who've just tuned in, this is the show where we do your life financial planning. Just send across details of your mutual fund portfolio, investment details, what's the corpus that you want to accumulate via that investment. 865-797-4571, our WhatsApp number, themoneyshow@etnow.tv, our email ID, where you can send across your questions. All right, Pankaj, let's again resume, and let's take Jawahar's question. And he's got Parag Parikh Flexi Cap, Axis Small Cap, Kotak Emerging Equity, JM Flexi Cap, Navi Nifty 50, investing for long term, and he would like to add 2 more funds in his portfolio. After obviously you review the current ones, you can recommend that. Okay, I don't have him on the phone line, so I have no details in terms of what corpus he wants to accumulate. And so far, he is a long-term investor, but since how long he's been investing? Okay, so a flexi cap, small cap, he's got a mid cap, flexi cap, and a large cap index. So pretty well diversified. What would you say?
Yes, I agree with you, Kavita. He has a flexi cap fund, small cap fund, and mid cap fund as well. Flexi cap and Nifty 50 means that is a large cap index fund. So if he wants to add fund, not to one fund, he can add, that will be a value fund, value style fund, and ICICI Prudential Value Discovery Fund can be a good choice in this category. So only one fund. Rest, if he wants to increase the amount, he has good funds like Parag Parikh Flexi Cap Fund is there. He can increase SIP amount in this fund, as well as Nifty 50 Index Fund is there. He can increase the SIP amount in this fund as well. So only one fund I would recommend to him, ICICI Prudential Value Discovery Fund.
All right, just one more suggestion of value discovery fund. Is value theme the one that is going to be picked up? That is what you think? Analyze, Pankaj?
Yes, Kavita, at this moment, I expect that value theme will do better in future, because right now the markets have corrected, and we are expecting that now when the market condition improves, then this value style fund, where the stocks are available at the fair valuation, will do better in long term. So in his portfolio, because it does not have that kind of style, so that is why I have recommended to add that.
Okay. All right, let's move on. Let's take Shankar's question from Bangalore, and he started investing in mutual funds, and a target of 1 CR in 15 years for child education. Right now, he's investing 10K divided into 5 funds: Nippon India Large Cap, Parag Parikh Flexi Cap, Motilal Oswal Mid Cap, again Nippon India Small Cap. He says that he'll be stepping up his investment by 10% every year. He's planning to add HDFC Balance Advantage and SBI Contra, 2,500 and 5,000 each. That's what he says. 5,000 in total for both the funds is what he's trying to aim now. And apart from that, when the market falls, he's also adding some lump sum amount, is what is he saying, for retirement. And he's also investing in NPS, 1 lakh per year with HDFC Active Choice, with maximum exposure to equity. And he also has PPF as a debt investment. EPF is from employer. He's saved over there, covered over there. The current corpus is 19 lakhs. And all 3 are meant for retirement, so he's sorted over there. Target is 2 CR for retirement within 15 years. And will that be enough? So child education as a goal and retirement as a goal is something that he has asked your advice for.
See, first thing, let's talk about the child education. So if he invests 10,000 rupees per month, and already has accumulated something around 55,000 rupees, so 10,000 SIP, 55,000 rupees lump sum what he has accumulated with 10% step up at 12% CAGR, he can expect around 86 lakh. But as he had mentioned that he can add 5,000 rupees more. So with 15,000 rupees SIP 10% step up, he can expect around 1.27 crore. So his target is means 15 years, what he's expecting 2 crore rupees. No, yeah. So he'll have to increase his investment, but what he can expect is that 1 crore 27 lakh in 15 years. Second target is about his retirement. See, for retirement, what he's doing right now, NPS, PPF, and his employees' contribution to EPF and his contribution, I mean, employer prudent fund. So put together means he may not be able to achieve 2 crore rupees, what is targeting. Second thing, if he is able to achieve in 2 crore rupees after 15 years, if you see at 6% inflation, if I calculate, it comes to like 83 lakh rupees today. So that is why 2 crore will not be sufficient after 15 years. Considering that also, my suggestion that he should increase his investment for this goal as well. For child education, he wants to increase by 5,000. For retirement, I'm suggesting that he should increase by some amount, whatever possible. So like two funds he has selected. One is SBI Contra Fund. Another one is SDFC Balance Advantage Fund. So for child education, like he was saying 2,500 each, total 5,000. I'll say only one scheme he should add for children education. That will be SBI Contra Fund. So total 5,000 rupees can go in one fund. But for retirement, he can add one fund. So if SDFC Balance Advantage Fund he wants to add, that can be considered for retirement goal. But as he has 15 years investment horizon, my suggestion would be he should consider a large and mid cap fund. If he can take little higher risk of diversified equity funds. So in that case, large and mid cap fund will be a better choice. Motilal Oswal large and mid cap fund is a good fund in this category. But if he wants to maintain balance between equity and debt, then SDFC Balanced Advantage Fund, what he has selected for child education, that fund can be considered for retirement planning.
All right, so that's the advice coming up for Shankar, and two very crucial goals for which you did a great financial planning for him. Thank you so much, Pankaj, for being on the show today and helping our viewers with their financial portfolio queries. But for all our viewers, if you also want your financial planning done on the show, all you have to do is just send across your question on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.